G'day traders, this is our weekly update on the indexes and gold. We'll be reviewing a few indexes across Australia, the US, Germany, England, China, and then reviewing the gold price. A couple of pleasantries out of the way. This is just educational. It's not meant to be making recommendations to buy any of these instruments. So just please take it forward and make a decision based on more knowledge you acquire. So let's get stuck into it and some rules on what we're looking at. So first off, what we're doing here is we're looking at roughly a 5-month period on each of these charts. So as you can see here, our baseline here is $100,000. This is a profitability chart. This shows the number of positions opened, and this is the price chart. And these are part of our trading rules. For the CCI 100, breaking above the zero, you buy generally, and when it breaks below the zero, you sell. So, and then this is what's showing, so as each of these 15-minute bars progresses forward into the future, the 15-minute bar at the end here falls back. So in other words, it's always a rolling 5-month chart on a 15-minute chart time frame. So we're looking at rolling 5 months on a 15-minute chart. We're looking at these instruments. These are the margins required for each of those instruments. So the ASX requires $33 per contract, and we're trading 5 contracts on each of these, just to keep the chart consistent for our testing. As you can see here, for example, China has made the biggest profit, but it's also got the biggest margin requirement. So 5 contracts at $250 per margin versus, say, gold, which is only $9 per contract for 5 contracts, attracts a lower profitability and also a lower drawdown. And this just calculates out roughly divided by 5 for 5 months, what sort of profitability you can expect for each of these over the 5-month period per month. And again, these margin requirements are dependent on your broker. So just be careful how you go into that, and make sure you understand what your broker charges in terms of a margin requirement for these CFDs. Okay, so let's get stuck into it. Looking at the ASX 200 first. So overall, as you can see, it's made $59.50 for the 5 months. And what I've done here is I've drawn these vertical lines indicating the weeks. So this was last week. This is where we are. Today is Sunday, the 14th of February. So this is the end of last week, and what it's done in that period and what it did in the previous weeks. So as you can see here, we closed out here after holding it back here for a couple of weeks. It made a nice little profit there, holding out a set of 5 contracts only. Closed out, the CCI dropped below zero. Also part of our trading requirements, it needs to drop below zero to close out, as it did back here, but also it needs to fall below the -50 line. So the CCI moving average of 20, the red line, needs to fall below the -50 and then break above the -50 to show a ready for entry, then break above the zero to enter, and that's what it's done here. So this little indicator down here indicates it's broken above the -50, and then it finally broke above the zero. Okay, some of these periods take longer. So here you can see it broke above the -50, but then it retraced back, kept into a bit of a downturn, and it finally broke above the zero. And that's where, had you not entered the trade there, you would have entered it there. Next, we'll look at the US 500, and here we're trading a $19 contract. We made $40.26 with the drawdown of $25.99. So you can see here it made a nice little upturn. It's going sideways at the moment this week. And very similar to the ASX 200, it held it for a couple of weeks there, then it closed out, and then it reopened again. Look at the long-term 5-month period. You can see there it's done quite well over that period, with the exception of that little drawdown there on profitability. And that profitability, as we said, was $2,500. And measuring the drawdown is simply looking at the highest there down to the lowest, if you want a profitability loss. So that's about 25, from there down to there's about 25.99 exactly, but we can do that with this little ruler. We can put it from there to there. There you go, 25.99 from the high, that little peak there, to the low there. Those other little peaks and troughs, they're nowhere near as much as 25.99, so they're just little adjustments to the price as we go up. But that was the biggest drop because we also doubled up on our contracts. Here we started with 5 contracts. There we had 10. And there we had another additional 5 contracts. The positions there, you can see 15 contracts being traded. And when it finally closed at that point there, our profitability was very nice since it opened back here. Next, we're going to look at the German index. As you can see, the German index trading on a margin of $65 made just over $12,500 profit with a drawdown of $17,000. Again, during the same period, you can see there it dropped off, and that was our biggest drawdown. For the last couple of weeks, it's been going sideways, and we've still got an open position on that. Next, look at the FTSE 100, $33 margin per contract, and we're trading 5 contracts for each of these. Made just over $5,500 profit. That should be a negative. Let's adjust that. So $4,800 in a drawdown. So the FTSE, let's look at the 5-month period. Again, that was the biggest drawdown there. We had a bit of a drawdown here as well, but it's recovered. Let's just check that. I'm not sure if that 2.5, we said it was a drawdown of 4,800. Let's just check which one that was. So we'll draw a ruler on that period. So let's look at the high from approximately there down to there. That's $4,500 there. And we've got another drawdown happening up here. 6.1. So this is not closed out yet, and it hasn't registered on the report, because once this closes out, and it hasn't closed out yet, we're still in a trade for this one, but it's recovering, but not yet recovered into a profitable position. So once it goes above that point, according to our closeout strategy, then that's where we'll close it out. But at the moment, if this turns down again, this will register as the new drawdown, 61.91 so far. Next, look at China. Now this one's trading at $250 per contract, so 5 contracts times 250. When it makes money, it makes good money, about $20,000, with a $5,500 drawdown. So looking at China, looking at the long term again, it's been trading single contracts all along. That's because the share price has been going consistently north. So it's been a pretty good trading opportunity, especially in the last couple of weeks, you can see here. So just be careful of any retracement of price if you want to get into this one. But so far, we've closed out here. You can see there the CCI 100 is pulling back, but we've already closed out, so we're safe from any new entries. So it's not going to open anytime soon. It needs to drop below the 0, then drop below the minus 50 again before any new entries are considered. But that's been a nice trade for us over the last few months, especially the last couple of weeks. Lastly, gold. Again, we're trading at $9 per contract, hence the low profitability, with a $2,600 drawdown. So looking at gold, let's look at the long term. It's going downwards and sideways. Lots of volatility there. The biggest drawdown happening here. So again, let's do a quick ruler on that just to prove the drawdown happened there. 2,663 approximately, that's just based on the drawing, but the actual number was 2,679. and they're taken from our charting software. So if I do a detailed report on profitability, you can see that 2679 is the maximum drawdown. So with this one, we're still in the trade. It's been going upwards and then downwards sideways for a number of days. We've entered up to here. We've entered 10 contracts. We entered our first contract back there, first 5 contracts back there, and our second 5 here. So far it's going in a sideways motion. We'll hold and see how that performs. So that's our summary again. So over the 5-month period, roughly, we've made $49,000, and it works out roughly $9,800 a month. Now again, don't forget, this is a rolling 5-month chart, which means as the new 15-minute bars are exposed here, the old 15-minute bars are removed. So this is just a theoretical 5-month period we're looking at each of these instruments. So there's no guarantee you're going to make $49,000 for these instruments over the next 5 months. Okay guys, if you like that video, please subscribe and hit the like button, and we'll review again next week and see how we're performing. Thanks again.